to Richard Sheehan, the Chief Executive from Shropshire Chamber, to start this morning's proceedings.
Julia, thank you, and a very warm welcome to all. International trade is a very important part of the work of Chambers of Commerce across the country, and indeed we have a unique situation with the Chambers of the West Midlands working together in partnership to provide both international trade support for export, but also documentation. This allows us to be very connected to the business community, and it also helps us to be very aware of the challenges that people face. And what is very clear to us is that the changes to the border controls that will come on January the 1st are something which currently are not on everybody's radar. It's quite understandable with COVID-19 and the impact on business that there has been, that distractions are there. However, this is coming, and it is a significant issue for exporters. And as such, the West Midlands Chambers have come together to bring you this webinar today, and we're really privileged to have Liam Smyth with us as Director of Trade Facilitation for the British Chambers of Commerce, and also Project Manager for Chamber Customs, which is designed to support you, our business community, through the minefield of customs declarations as they are needed. So I'm going to hand over to Liam. I'd just like to reiterate, please, that use the question and answer section at the bottom of the screen. If you do have any questions, we will endeavour to answer as many as possible in the time we have allowed. Please also put your name within the question. That's quite important to us to understand who the question is coming from. So Liam, if I could hand over to you, and we look forward to being enlightened as to how we deal with the future.
Thank you very much, Richard, and welcome to all of you who have joined us this morning on this webinar, where the subject matter is the UK border customs controls from 1/1/21 and what that means for your business. So let me just get control of my mouse here, take you through a very short agenda that probably is weighted about 60% in favour of point 1, and about 40% will be covered by the rest of the subject matter, because actually the big issue here is that as Richard said, this change is coming at us like a juggernaut, really, at a time when businesses up and down the country have been rightly distracted by the COVID crisis, and for many just dealing with surviving as a business through this past period and into the months ahead. So, but this is a really important element for anyone engaged in international trade, anyone engaged in moving goods across our frontiers and our borders of the UK, and as we'll come on to later, also quite important when dealing with goods that may be moving between England, Scotland, Wales, and into and out of the north of Ireland. So there's a lot to cover this morning. I'm going to take you on a little bit of a roller coaster ride, I hope, over the next 20 to 30 minutes, and then we'll have time for Q&A. As Julie already said, use the chat function at the bottom, please. If you could declare who you are. A little technical error means that many of you are appearing as our colleague Teresa Rowe. Sorry about that, but if you could put your name and your company name onto the chat, that would be really helpful for us so that we can capture that information later. So what is the background? There's a kind of backdrop to what's going on. First of all, it's worth reminding everyone that actually we've already left the European Union. That happened at the end of January this current year. But because of a transition period being agreed and of course later extended, we remain part of the single market and customs union. So we can act as if we're in the EU, but actually we've already left the EU. Another piece of background is that the Northern Ireland Protocol, the so-called backstop, was replaced with a revised protocol on Ireland and the island of Ireland, and that has implications for how we deal with the north of Ireland and the rest of Great Britain over the course of the years ahead. We can say that there will be no further extension because the deadline, of course, has been passed. That was the 1st of July of this year. And so we can be absolutely certain that our period as part of the European Union ends on 31 December, and new border controls come into place on the 1st of January. And whilst UK-EU negotiations continue, there is simply 23 weeks to go, and regardless of what happens with any trade negotiations, our border controls will be in place in the way that I'll describe in part later, and in the way that you can go into detail. There's a 206-page document that was published by Michael Gove on the 12th of this month, some 2 weeks ago. And if you, in that document, you can go into a great deal of detail on issues that may be specific to your company. What I'm going to do today is I'm going to try and take you on a bit of a route through that document, concentrating mainly on what we call standard goods, but I will touch a little on some of the control goods that apply, where new rules will apply for UK trade. So that model was published, as I said, on the 12th of July. And what it states is that full UK border controls will be in place from the 1st of January next year. But there will be time to adjust for imports related to goods coming from the European Union and arriving in the UK for up to 6 months. And I'll go into some detail on what the implications are in that regard, and what you might do with regard to that staged approach to the introduction of controls on EU imports. Important to state, though, that that staging doesn't apply in the same way to EU exports, where full controls will be in place. They've also said that they will, in that document, they will waive safety and security declarations for 6 months, but that applies to only standard goods. And also that there will be sanitary and phytosanitary controls that will come into play under a new UK regime from April. So there are 3 stages, if you like. January the 1st, we have full declarations, but the opportunity to make to take a staged introduction to full declaration. April the 1st, when sanitary and phytosanitary controls come into place in full. And then July, when the staging period ends and everyone, whether they're importing or exporting to the EU, as well as the rest of the world, will be subject to full customs declarations and full border controls. And of course, this staging only applies to what are known as standard goods and those that are not on the controlled goods list. And I'll come on to later show you what the controlled goods list looks like, what's in that. So just to look at what is changing and what's not changing, at the top, we've got rest of world imports and rest of world exports. Actually, nothing significantly changes for customs declarations to and from the rest of the world. That remains the same. There is no significant change. But actually, as I've already said, for goods being exported from the UK to the European Union, there is change. So for the first time, traders, since we've been part of the European single market, traders will have to make customs declarations for goods leaving the United Kingdom and going to the European Union to our many customers in those markets, in those 27 countries. And that will have a significant impact because actually, well, first of all, businesses need to know how to do that work if they don't already trade with the rest of the world. And secondly, they have to prepare to do the exports at a time when they may make some decisions about staging the processing of customs declarations for EU imports. And remember, no matter whether you stage the approach to EU imports from January by July, you will have to be making those full customs declarations in any case. So new from January is full declarations for EU exports, for EU imports of controlled goods, for EU imports of excise goods, those are things like tobacco and petrol and so on. And you also, for EU imports, if you're making taking the staged introduction to a full customs entry, you will have to keep an entry in your declarant's record. That's to say, you have to keep your own record of those goods that have arrived from the European Union and been accepted by your company into ownership, because you will need that information later to make a full declaration. New from April is the sanitary and phytosanitary controls applied by the United Kingdom. And then from July, summary declarations will need to be made for those goods that have arrived in the period January to June, and for which you have not yet made a full declaration. You've not declared the goods and calculated the duty and VAT that's due in those goods. And so that would be the payment of those duty and VAT sums would be delayed until you make the summary declaration up to 6 months later. And of course, from July, you will have to make full declarations for EU standard goods, as well as all the excise goods you've been declaring already, and the exports. So the whole of that circle, the full pie, becomes a full declaration pie. So just looking at specifically at exports, what do you need to do at the UK border from the 1st of January for goods that you're going to export? And this applies to the rest of the world as it does today. But for those on the call who maybe only deal and trade with the European Union, then this is important information for you. There are some things that you can do right now. So for example, there's an HMRC trade tariff tool that's live, it's online right now. A search of gov.uk will find it. And on there, you can check the duties that may be due on your goods for whatever country you're exporting to, not just the European Union, of course, the rest of the world. So you can start to plan on the implications for your goods going to the markets you send them to, and what's likely to be the case on the 1st of January. Now, clearly, if we have a trade agreement that we reach with the European Union, some of this information, may change, but it's only going to change for the better if there's a trade deal with the EU. Therefore, in terms of scenario planning, like right now, it would be useful for you to understand what the tariff duties may be at the point of import into the country that you're exporting to. Secondly, for exports across the UK border to the EU and rest of the world, simplified declaration procedures are going to be available. And those simplified procedures will allow you to enter the information on goods you're exporting into your declarant's record. That's your commercial records. And to summarise a number of exports taking place over a period of time, up to 4 weeks later, when you can make a supplementary declaration. And so that would allow you to reduce the number of full declarations that you make and roll them up into a supplementary declaration. Now, in order to do that, you need to either have approvals from HMRC to do the supplementary declaration, or to be using an intermediary who has that approval and can do that on your behalf. The government is also saying that it's developing a capability to request any consignment changes in routing or to not proceed to the port. So something the government is doing, quite important to know this, is it's aware of the possibility of having congestion at our ports after the 1st of January, should trucks loaded with goods arrive at our ports without the proper paperwork. So they're developing a system, which I'm going to come on to later, called the Goods Vehicle Movement System, where there will be pre-notification of goods being transited and destined for the port. And the government, through HMRC and other border agencies, will be able to see online through electronic data the goods that are in movement and heading towards the port. And if they deem that either the paperwork, the information that's been lodged is not fully correct, or they deem that they would like to inspect your vehicle, then they are developing a system to be able to message the vehicle through an app and instruct the driver to either not proceed to the port because they will not they don't have the correct information, or to proceed to an inspection, place of inspection, whether that's for live animals, for foodstuffs, for plant material, or simply because intelligence-led border controls mean that they either randomly or specifically want to check that consignment. They will be taking steps to develop systems so that unless a driver has notification to proceed to the port, they should not proceed to the port. And clearly, if a physical check is required, then the haulier or the declarant will be instructed to send the vehicle with the goods to a specific inspection point, and for further checks, therefore, to be completed by border control. But all of this means that actually at the border, for import particularly, and for export, you have some options to take. So what the government's trying to do is trying to give you options in order that it helps cash flow on the one hand through the delayed payment of duty and VAT. And secondly, it gives traders time to come to terms with full customs declarations. But for many businesses, actually, there may be a choice to be made, particularly if a trader is already sending goods to the rest of the world outside of the EU and is familiar with the systems and controls for goods moving through our borders, and actually can segue and can move towards the new border operating model fairly seamlessly. So the questions are, are you as a business going to make staged declarations followed by summary declarations, or are you going to do full declarations on EU imports from the 1st of January? Will you opt for simplified or full declarations for your exports from the 1st of January? On import duty and VAT, there is a choice to pay or pay later. You can't not pay, you have to pay, but actually you can choose to pay now or pay later. And the way that would work is, at the moment, most businesses who have duty and VAT to pay on imports will either use their own duty deferment account, which is secured on a bank or insurance bond, and HMRC give a threshold up to which you can defer payment of duty and VAT. Secondly, some traders will use the intermediaries duty deferment account, and that means that typically they would pay the intermediary immediately the goods arrive in the UK, but the intermediary wouldn't pay HMRC until later. The advantage being that your goods clear much more quickly. And then from the 1st of January, there's a third option on VAT. The introduction of postponed VAT accounting will mean that for VAT registered businesses, they will be able to delay the payment of the VAT element of import costs and taxes until their next VAT return. And in fact, only yesterday, HMRC published the process for doing that and for making that happen. It's a very simple approach, and the procedures are published in gov.uk right now. And then lastly is this staged approach that will help businesses for a period of 6 months. And that means that basically companies can choose to, if they take the staged approach, they will apply for a duty deferment account. They will make entries in their own commercial records and goods arriving using their EORI number and using the EORI number to clear goods at the port. And then within 6 months, so for January, you have to up to July to make your declarations in full. For February, you have up until August. For March, September. And at that point in July, August and September through to December at the latest, December for those declarations made in June, you would declare the amounts of duty and VAT due and use your duty deferment account at that point to be able to, or postpone VAT accounting to make the payment to HMRC for the duty and VAT. And then the last decision is, do you just make full declarations on all your imports and exports? So what are some of the pros and cons to that? So what are the reasons why you might want to make full declarations? Well, from the get-go, and almost ignore the staged approach to declarations. Well, reasons may be that you already are trading with the rest of the world. You already have systems and processes in place in your business, and actually you would rather just stick with those systems and those processes. You're familiar with the way that goods are cleared at our ports, and actually you can use delayed VAT payments through postponed VAT accounting from 1st of January. And in any case, the duty that you pay may be quite small, and you would look to the new UK global tariff to check the duty payments on your imports at the UK border. If those are small and modest, it may be appropriate to apply for a duty deferment account under this new operating model, as they will be available for use from the 1st of January without the need for a customs comprehensive guarantee. Now, what that means is that businesses today that have a duty deferment account either have to buy an insurance bond or hold cash at the bank for the sums that they have on deferment up to a maximum limit. So very often companies will have a £20,000 deferment account. They'll have £20,000 in a bond account at their bank, or they have an insurance document, an insurance bond up to the value of that sum, for which they would pay obviously fees to banks or insurance companies to be able to operate that account. In the future, those bonds will not be required, and HMRC will set a threshold limit related to the scale and size of your business and your transactions. So clearly, if you apply for duty deferment on the staged approach, they would calculate your likely duty payments for a 6-month period. So using full declarations now means that you also don't need to apply for any new simplifications other than a duty deferment account if you don't have one, and that's going to be a fairly easy application process, or you may continue to use the duty deferment account that you have. So if you have those simplifications in place and you have those approvals in place, there may be a low appeal to moving to staged introduction of EU import controls. So why might you want to use the staged approach? Well, one is clearly cash flow. That's a big draw towards staged introduction, and also it gives time to learn the full declaration system. So for standard goods, though, it needs to be standard goods, not controlled or excise goods. You simply enter the information on your declarant's record. Now, it's a fairly long list of information you have to keep, but actually creating an Excel spreadsheet with those headings and a system internally to collect that data is not a big leap for most businesses to do that. You only require your EORI number in order to accompany the goods arriving at a non-inventory linked port. Just to explain, we have around 80 ports in the UK that are inventory linked ports, and those are ports where all the goods arriving at the port are logged on a port inventory system operated by the port. And in order to clear goods at the port for collection, you need to connect with the port inventory system, either yourself or through your intermediary. That's also connected to the HMRC Chief system. And basically, once Chief is satisfied that the duty and VAT and border controls are in order, then they release the goods for collection by your haulier, your carrier, or indeed yourself. So non-inventory linked ports, you'd simply arrive with the ORI number travels with the goods. You take your ORI number to the port, and that's proof of your ownership of the goods. That ties things together. For inventory linked ports, though, you will have to show evidence that your EORI number is part of a declaration that has been made. And actually, we're still ironing out, HMRC and the port operators, quite how that will happen. How will the port know that you have an entitlement to collect those goods from their system if indeed there is only a entry in your records that doesn't seem compatible, but we will remain to see what happens with that. The big advantage is that your declarations can be delayed, and that will help your cash flow, as I said already. And the fact that duty deferment accounts will be available with no financial bond, but simply an application based on your previous record. Clearly, if you have a poor record with HMRC, you will not get a bond-free deferment account. But if you have a good record, then the likelihood is that they would appoint a level, a threshold that you would be able to utilise, and then account for the VAT on your deferment account and make payment on the 15th of the month following the month of import. Now that obviously would apply on the staged approach and subsequently when we're making full declarations. The one reason why you might not want to take the staged approach is the running of two operating systems for your goods trade in your company. That may be a barrier for you. It may be if you only import and export from the European Union, that you choose just to go with the full declaration model from the get-go, rather than to learn a staged approach and then within 6 months learn a full approach. So there are benefits to both approaches depending on your business, but certainly the staged approach will be a great help to cash flow for businesses, particularly on the back of the COVID crisis. Just to say something briefly on safe and secure declarations, I want to highlight this as an extract from the 206-page document, but it's important to say that the safe and secure declarations, whilst they are waived for 6 months for EU imports, they're not waived entirely. And important, that third paragraph, carriers have the legal responsibility to ensure that UK Customs Authority is provided with safe and secure pre-arrival information by way of entry summary declarations. So if your goods require safe and secure declarations, then your carrier is going to be demanding that you can evidence that you have that declaration in order they are cleared for arrival at the port. So that's one of those things that unless the carriers have all the data they need, they will not want your goods in their container to be stopping all the other goods being able to arrive at the port. I'm not going to say much more about safe and security declarations. Nor am I going to say a lot about sanitary and phytosanitary controls, other than to say that, again, on these controls, there has to be pre-notification of your intention to import goods that are subject to SPS controls from the 1st of January. And that is, animal products, fish, shellfish and their products, live animals, plant and plant products. And in fact, those controls become more rigorous in April, but nonetheless, they exist right from the 1st of January. So there has to be an import pre-notification to customs. The health certification has to be in place, and that's your export health certificate for goods going out and phytosanitary certificate for goods arriving. And all the documentary, identity and physical checks at the border will take place from the 1st of January. And those goods will have to enter via border control post. Now, there'll be temporary arrangements between January and July when the border control posts are currently under plan and construction. I don't know whether they're shovel ready exactly, but nonetheless, there is an ambitious plan to build more border control points. And those border control posts will be where goods that fall into SPS control will route to when they arrive or before they leave the UK in full control from July. That control goods list that I mentioned before, this is the list. I mean, it's got 21 headings on it, and then there's detail below each one of these if you go onto the government website and search for control goods list. But the key ones, I guess, that will affect most people would be excise goods, plants and plant products entering through border control posts, obviously from July, but those are control goods. And we do eat a lot of vegetables, so these are plants and plant products. We've got controlled drugs and drug precursors, that's pharmaceuticals. We consume a lot of those. Fishery products, we have a fishing industry that needs to remain live, but they will be subject to significant increases in controls, and pretty much, you know, I don't think many of us will be importing rough diamonds, but you know, that's an industrial diamond as well as a one that may go elsewhere. But the rest of these control good categories rarely apply to most businesses. So mostly we don't bring in weapons of mass destruction and their related goods, or explosives or firearms. Most of these would be niche to a few businesses, but some are pretty broad ranging in their reach. And of course, they are controlled for obvious reasons. We are an island. Well, we're hundreds of islands, aren't we? And we have to make sure that we have control of where live animals or animal product, plants and plant product move around the country, in order that we can limit and control the development of diseases should they be introduced. And it's not so long ago we had devastating diseases reach our country in terms of agri and farming industry. I'm going to turn now to Northern Ireland. There will be a new GBNI border operating model due tomorrow, so keep alert for that. But we already know from some parliamentary reports and some other reports in the media what shape that is likely to take, and I'm just going to touch briefly on that. But some of the key things that you ought to know about this is that the CDS, the Customs Declaration System that's been in development at HMRC for a number of years now, and has been delayed due to Brexit and some other factors, is going to be deployed. The intention is that that new Customs Declaration System will be deployed on the GBNI border from the 1st of January next year. And that's a big leap for businesses. There will be very few intermediaries and even fewer businesses that have done any testing on CDS. So HMRC are moving very quickly to create a CDS, a version of CDS for the deployment on Northern Ireland GB in order that it can cope with the Northern Ireland Protocol and its responsibilities. There's also a new goods vehicle movement system that's been announced for Ro-Ro traffic that will require pre-lodgement of declarations prior to reaching the border of departure. Therefore, if goods are coming from Calais to Dover, that GVMS declaration will be made at Calais, and during the crossing to Dover, in effect, it will either be cleared or directed to an inspection post. But that Ro-Ro traffic in GVMS will be introduced on the 1st of January on GBNI crossings, and in July for Dover, Calais and other Ro-Ro ports from GB to, well, UK in effect to EU. And so that's some big changes coming in terms of Northern Ireland. And so we'll look with interest to see any of the finer detail as it emerges tomorrow. But just on that, just to give you a couple of an idea of goods moving from Northern Ireland to the rest of the UK, it will only be by exception that any processes will apply to goods coming from NI to UK. But actually, the detail we need on this is, and what basis would a trader decide that they needed to make a declaration of those goods moving from Northern Ireland to the UK? Well, actually, it's back to that controlled goods list, and probably it will be based on the controlled goods list, and it may also include live animals. We've yet to see. But in the event that a trader decides that they have a responsibility to declare those goods as being moved from NI to GB, then they have to let their haulier or intermediary know that. And the haulier then has a responsibility to generate a goods movement reference using the GVMS system, and ensure that the unique reference details are in customs declarations are known to them, that a safety and security declaration has been made. If the goods are using the Common Transit Convention, that the CTC document is with the truck. The carrier, that's the the vessel, or it's described here as a train or a boat, but in NI terms it's a boat. We don't have any rail traffic, I don't think, from NI to GB. The carrier, therefore, the vessel, has a responsibility to validate the goods movement reference on behalf of the haulier, and to take to log that that's happened, and to trigger the arrival process, that automated process, an officer transit function for goods under transit. And the carrier, the vessel that carries the truck, also has to independently record the truck and the container or trailer registration number. And that's the responsibility that comes for the first time and is placed on the carrier and the port authorities. And then HMRC, Her Majesty's Government, and its agencies receive the notification that the goods have departed, and so can then make a choice as to whether anything happens by way of inspection once the goods arrive in GB. There's a brief slide on here on goods vehicle movement system. It's not a complicated system on the face of it, but of course it's going to rely on technology that we don't have yet. Not only do we not have it, but actually we don't really have the detail on how traders and intermediaries have to use it. And as we know, people don't only have to know what the system's intended to do, but they have to be trained on how to use it. And there is just 23 weeks to go, so time is of the essence. But in essence, what GVMS does is it takes a series of declarations and reference numbers related to all the goods in a container, and it summarizes them under one umbrella number, which is the goods vehicle reference. And it allows the carrier, the haulier, to know that each element of their container, each package in the container, each element of the goods in the container have been declared in some way, either via the EORI number or otherwise, and that actually they will get approval for the goods movement reference from HMRC and be allowed to proceed to the port and onward from the port. It's worth explaining just a little bit the nuances on GB NI. Goods moving, in terms of goods moving from GB to NI, this is the nuance piece. GB is considered to be in the UK customs territory and following UK customs rules. But in Northern Ireland is in the UK customs territory, but it's applying the EU customs rules because it's continuing to be part of the single market. And that's why we have differences in GB in Northern Ireland compared to the rest of the UK. And goods from Great Britain, the rest of the UK, are treated as if they're an import into Northern Ireland. Now the document qualifies where this should be applied, and it kind of uses, I'm not going to say weasel words, but I just have. But what it says is goods at risk of travelling to the rest of the EU have to be recorded. But it's not entirely clear how you can differentiate between goods going from GB into NI that won't then find their way into the rest of the European Union, as the NI is part of the single market. Therefore, to maintain controls, the UK government is saying, actually, we need to record all of these movements in order that we have the data, and at some point in the future, we may follow through. So just to go back to one of those little schematics, what happens with goods from UK to NI, to summarize some of this, is again, the haulier generates the goods movement reference for each of the goods within the vehicle, and they populate their goods vehicle movement app with all of those individual declarations for each of the goods within the full consignment as import declarations, the safety and security declaration that's part of that typically, and also if it's the goods are moving under transit, the Common Transit Convention paperwork, which has to move with the vehicle. Again, the carrier, the ship, or the Eurostar operator has to then validate that goods movement reference. They have to trigger the automatic arrival of the goods or the Office of Transit function, And finally, they have to also, as I said before, independently capture the vehicle and trailer registration details from the vehicle. Then, while the goods are moving across the channel, Irish or English, the government and its agencies then use that data to identify those trucks that they would want to further inspect, and during the period of transit across the sea will inform the driver of the vehicle if they have to go to an inspection point to have the goods inspected, and they'll provide that status update. Basically what it means is you either get a red light or a green light when you arrive at the port, and this is a change that will happen for all UK ports from 1st of January. Hauliers and intermediaries will be responsible for ensuring that all of the paperwork is sound before they move towards a port. And if they don't have all of the correct paperwork, either before getting close to the port, they'll get a message telling them not to proceed to the port, or should they arrive at the port without the correct paperwork, they will not be accepted by the port authorities and the carrier to proceed to the port. They'll be turned back. So it's really important that all elements of the declaration, the safe and secure declaration, the goods movement references are in place from the 1st of January, and that you have systems and processes, or you have got third parties doing this work for you in order that your goods can move freely through the port of departure and arrival. Just on those safe and secure declarations, there are different timeframes by which these have to be done and carried out or notified to HMG, depending on the mode of transport. So you have a lot more time with containerized cargo. You have to give 24 hours notice before loading at the departure port. For bulk, it's 4 hours. For sea voyages and ro-ro, less than 20. Sea voyages that take less than 24 hours, it's at least 2 hours before your arrival. And likewise for long-haul flights, 4 hours. For rail and inland waterways, 2 hours. Road traffic, at least an hour. And short-haul flights of less than 4 hours. The time of actual takeoff is the deadline by which you have to notify. And in fact, you know, on flights, you can, you know, when you arrive in the UK, if you have certain, you know, more than £10,000 cash, or you have goods that are over the, I think it's £1,300 threshold, then you can go to the red lane and make your declaration at that point. So safe and secure, different timelines for that. For carriers on NI, just to, I think we're getting to the end of Northern Ireland, they are being told to refuse boarding to any vehicle that has got an invalid goods movement reference, to verify at check-in the vehicle registration number for accompanying movements or trailer registration for accompanying trailer movements matches the reference. So they have, this is a big responsibility being placed on the port that doesn't exist today. They have to send all the goods movement references to HMG, the JVMS system, and for transit to the Office of Transit. So there's a lot of responsibility on the NI border being placed on the carriers and on the ports. So turning now to what do you need to do? Cut to the chase. What do you need to do right now? Well, if you don't have or recognise that you have an EOI number, you need to establish an EOI number for your UK entity, a GB EOI number. A clue as to what it looks like, it's really your VAT number with GB on the front and 3 zeros in the end. HMRC automatically issued them last year after much lobbying from the BCC actually to do so, so they have been issued. You may find that you have one in issue even if you're not aware you've got one, but you need to establish that you've got an EORI number or apply for one, and importantly understand what it's used for. Secondly, this is things that you can start doing right now today. Secondly, you should take the look for the commodity codes of all the goods that you import and you export, and make sure you know what that commodity code is. And that may sound like a you know, it can only be one thing or another, but actually there can be nuances on commodity codes that can have an impact on the duty that you paid. So it's wise to take the time to just analyse the products that you import and export and establish their commodity codes so that you have that to hand, and indeed perhaps even systematically approach that in your organisation. And likewise on customs valuation, because the duty you pay at a border and the VAT due on those goods is determined by their customs valuation. And customs valuation is different to invoice valuation. So again, you need to understand what customs valuation is based on the WTO rules and to apply those. Even if we have a trade agreement with the EU, there could be some items that are quoted, some items that are duty-free, and other items where duty is to be paid. We don't know what that will look like, so we have to assume and be prepared for WTO rules, which would be the basis in which we would trade should there be no EU-UK trade deal. You also need to understand the records that you're going to have to keep. And these records are the records that you would keep if you were making staged declarations or simplified declarations. But you need to understand what that information or what those key pieces of data are. Important that even if you use full declarations, for example, you need to know that you must keep evidence of export for all the goods that you export from your organisation. If you don't, you could find yourself subject to paying VAT on those goods because you cannot prove that they left the UK, but you can prove you don't have them anymore. So you need to understand the records that you need to keep and your responsibilities as a trader. And feeding into that, therefore, if you're giving an instruction to an intermediary to do work for you in moving goods across the border and making declarations on your behalf, it's really important that you understand your responsibilities and are able to give clear instructions that are, both legal from your point of view, not going to find you subject to some compliance issue later, and that you understand what the procedures are, even if you are not making those declarations yourself. And you may actually want to know how to make the declaration. It makes sense for you to have control on the inside and to therefore to have the ability to make declarations in-house. And finally, the other key thing I would say to you, there are many other things, but these are sort of highlighted things that I would say you want to understand is which borders are you crossing and what are the rules of those borders. So the EU, for example, has already published its border operating model, so that can be researched depending on which mode of transport and route that you're taking into the EU, or indeed to countries in the rest of the world. I've come across a number of businesses that have been trading with the EU only, but actually the goods arrive at another of the company's entities in the EU and then are exported from the EU into other markets. So it's important to understand those other markets your goods may be transiting through the EU too, because we may not have the same trade deal benefits that the EU currently has, or we have as part of the EU today, in the future after the 1st of January. So rules for the borders you're going to trade across. What are they? Get to know them. Just to give you an idea of the scale of the problem, I call this the prepared and unprepared. And this is from the National Audit Office statistics, but basically the number of declarations that we make in the UK today is around 55 million. And the National Audit Office has modelled that will increase to as many as 300 million declarations per annum from the 1st of January. And that's not a gradual increase, notwithstanding the staged approach, but that's just, that comes down like a sledgehammer pretty much from the 1st of January. And that's going to affect between 150 and 250,000 businesses in the UK. And the reason I mention this is because the unprepared need to get more prepared, and you can be more prepared as the result of today, I would hope. And secondly, you can take action to secure the capacity you need in an intermediary or a customs agent to do your customs declarations for you. And of course, a chamber customs network of chambers can do that work for you. It would be remiss of me not to say that at this stage. Also to note some things that have been in the news. One of those things is the wood packaging material, WPM so-called. We're part of the EU, so wood packaging material, we have a derogation from the World Trade Organization as part of the European Union and single market. That means that we don't need to comply with ISPM 15. I wasn't really aware of ISPM 15, I'll be honest with you, until this came out from the logistics sector. actually about 2 years ago, but it's been back in the press recently. And what it means is that pallets that are carrying your goods will have to comply with that regulation. And basically, it's a pest control regulation. It means the pallets have been fumigated or heat treated so that there can't be an infestation in the wood in those pallets. Apparently, there's a significant shortage of pallets in the UK, exacerbated by COVID, where the ovens that do the heat treatment have not been operating, and the logistics sector, I believe there is a significant issue with supply of pallets. So you need to be aware of that if you're moving palletized goods, and you may want to take action to ensure that you've got sufficient supplies. It's important to say that the EU border will also exercise controls. It seems obvious, doesn't it? But we're very focused in this call today on the UK border controls. But the EU has already published its border operating model, as I said, and so you can get familiar with what that means and what that might mean for you. There may be additional compliance measures for your goods entering the EU. You need to check that. And importantly, on Incoterms and other contract terms, you need to establish who's responsible for getting goods across the border. Particularly relevant if you're selling goods, if you're not selling goods ex works, or you're delivering duty paid. So checking your contract terms is something you will want to do, I think. I wanted to mention the £50 million grant scheme that launches tomorrow. It's a relaunch, really. There's already been £34 million of grant funding pushed towards customs intermediaries. It aims to increase the capacity to get those 300 million declarations done. It's focused on recruitment, training and IT. But going back to that statement I made earlier, if you chose to take your declarations in-house, this grant funding scheme could help fund both the recruitment, training, IT equipment, and salary for a period of time for that employee. And the website is open now. It's the 34 million scheme has been rolled over almost entirely. There are some nuances and changes, but we don't know what they are yet. We just know there are some, but we will know that information, have that information tomorrow. In terms of future trade, there's a lot of talk in the press about future trade agreements. DIT would say we've got 48 agreements in place that account for 70% of current trade, but that doesn't include trade with Japan and doesn't include the EU trade, quite important. New negotiations have started with the US, Australia, New Zealand and Japan. And in terms of confidence levels, I think I get the sense from people in government that they're very confident about Japan being delivered before the year end. They're pretty confident about Australia and New Zealand. They were confident about the US, but actually the tone of voice has changed on that, and it looked more likely that actually the US trade deal will not happen. They've got an election in November, so that's not likely to happen before the year end. They are negotiating with Norway, Iceland and the EEA and EFTA countries, where we had some rollover agreements with Norway and Iceland for day one no deal. They have to be repackaged, but they will be contingent on the European Union UK trade deal, as will Switzerland and Liechtenstein, and of course Turkey. We have a lot of trade with Turkey. £90 billion trade between our two countries is very significant. But Turkey is keen to do a deal with us, but it's subject to the EU agreeing a trade deal with the UK. If we don't get a trade deal with the EU, we're unlikely to have a rollover deal with Turkey. And also to talk about the Trans-Pacific Partnership, the big one for us on acceding to Trans-Pacific Partnership is that we bring in Canada and Mexico particularly. And to a degree, it may even encourage the US to participate in CPTPP, but only if there's a change of administration in the US. So the big show, though, for everyone ought to be keeping their eye on UK-EU negotiations. Third round's taken place already. The mood music is not good, but I would caution you to remember that all of these trade deals tend to go to the wire, and brinksmanship is a big part of the play. So there's the hyperbole and then there's the reality. So we should still remain hopeful that a deal can be done, but accept in our planning that we should be working on the basis that we'll be operating on WTO basis. I'm just going to finish off by saying something briefly about Chamber Customs. We provide customs advisory services, we train your people, and we'll make your customs declarations for you. That's a summary in 3 lines of what we do. How we do it is through a network of chambers, and some of those chambers are on here on the call today, including Shropshire, I know are here, and others across the Midlands who work very effectively in terms of international trade already, and also have now got this additional service that they're offering in Chamber Customs. I'm going to close there, I think, and I'll leave you with the other slides to read at your leisure. We will send you the slide pack, because I want to come to some of the questions that I know have been asked, and take some of those. I'm conscious of the time. I do apologise. I've really overran rather, Richard.
Liam, we'll forgive you given the extremely full content that you've provided, and we've asked you to do this because we really understand that businesses are going to face serious challenges, and if we don't get people on board now, there just isn't going to be the resource to support them in the short term. So I'm glad we've done that. Can we whip through some of the questions now, Liam? I'll try and keep them as quick as I can and in no specific order. There's a question here from Lydia, who is asking, will there be a template stroke guide available for customs declaration, or will companies be expected to create their own version?
Lydia, the format of a customs declaration, an entry is called a SAD, Single Administrative Document, or C88. It is templated, but in order to access HMRC systems, you really need to have a direct link to the Chief or CDS system, or work with a software provider to provide you with those that templated software. And the software provider basically creates the link between your software and the Chief system. Now, that's not a quick and easy thing to do, I have to be honest with you on that, but it is doable if you have sufficient volume of entries to make. There is also the National Exporting System for exports, where through HMRC you can use a template for exports, but you need to have sufficient knowledge to make that in a compliant way. To be compliant with HMRC instructions, you need to understand what each of the box requirements are. Otherwise, the system will simply reject your entry. But the cost of getting someone to do an entry is not high. It doesn't cost a huge amount of money, and what they bring to it is their knowledge and experience of how to make those entries work, and also their connections with Chief and with the port systems. You couldn't make an import through a port inventory system unless you had a key to access that system at each of the ports that you import from. So my advice at this stage, given 23 weeks to go, is secure a customs broker or intermediary to do that work for you. And of course, Chamber Customs are ready to do that work for you too. So I declare an interest there.
Yeah, Liam, thank you for that. Moving very swiftly on to a name we're familiar with, Nick Patrick from Sheffield is asking, can you explain how vehicles with multi-consignments will be dealt with, especially where the declarations have been done by different agents, and might happen if one of the consignments has not, what might happen if one of the consignments has not been declared? So we've got a container full of things where one's not declared.
So that goes back to the goods vehicle movement system, where by the sum of all of the declarations on a vehicle will have to be to a satisfactory level by the carrier. So the carrier or the haulier will have a responsibility to ensure that the goods vehicle movement system has all of those declarations in place. And in fact, you can imagine what they're going to do. They won't compromise a whole load because you haven't got your paperwork in place. They're likely to not uplift your goods for transit to the port of export, or take them to the port of export unless they have that paperwork. So you risk not having your goods moved if you don't have the correct paperwork in place. It doesn't really matter that there are multiple agents, because all of the agents will have logged the declaration on the same Chief or CDS system in HMRC, and will each have their own movement reference number. So It's the collation of those numbers on the GVMS system that matters. And so they won't pick your goods up if you haven't got the paperwork in place. So you have to have the paperwork in place to get the goods moved.
Liam, thank you. And there's one here which actually is for me, which is from Tracy from Newmore. She's asking if there will be additional fees for the Chamber to make customs declarations for them. There will. They're very, very modest. We're here to support you, not cause you significant cost. But obviously the risk of not getting it right is too much to bear. So yes, there is. But please talk to Ingrid at the Chamber and she will be able to update you with all the information you need. We have a question from Ajay talking about what the expectation is in terms of the number of customs declarations that Chambers will be delivering. Very difficult to answer, I think. But Liam, do you want to have a stab?
Yeah, I can easily have a stab. It simply relates directly to the number of staff employed in each chamber. So each individual has the capacity to process a number of declarations in any given day, any week, any year. So the more staff that the Chamber have deployed and trained and ready to do this work, the more they can do. So that varies across our network. But across the whole network, we have significant capacity available for traders from the 1st of January. Remember, I mean, don't remember because I haven't told you, but we've set this business up in the interest of our members, realising the huge growth in declarations that are going to take place. So we have been poised, ready like a coiled spring to support Chamber members across the Midlands and elsewhere to be ready for this end of transition or day one no deal, as has happened on a few occasions and that didn't come to pass. So we're ready, we've got capacity. Engage with your local Chamber. They're the people that can help you. They're supported by us at the centre, but actually this Chamber Customs Services is a great example of how we operate as a Chamber network, and that we deliver locally to the customers that we know locally and are connected to. And Chamber Customs will do that on the ground in Shropshire, in Coventry, in Birmingham, and elsewhere in the Midlands. And they're ready to work with you right now. So please get in touch and secure the capacity, because it is finite.
Liam, thank you for that. And yes, to reiterate that, I think we're all very aware that the demand potentially will outstrip our availability of support, even though many of us have already invested in fully trained people to support your business need. And that continues. We do work in partnership, so we do have the flexibility to support different areas. If there is a massive demand, we're here to make a difference, and that's what we're trying to do. So to echo Liam's message, do talk to your local chamber. It is so important. They do have access to Liam and specialisation if they can't answer the question for you yourself. And for those who've asked questions that we haven't been able to answer today, then I'm sorry about that, but please do talk to your local chamber. If they can't answer it, then we have a man who is on screen looking very smart, who has the expertise to help us through it. So I think at that point now, ladies and gentlemen, I'm sorry we've run over, but I think it's really important we hear this information. We need to be prepared. Liam, can I thank you for sharing your expertise with us this morning, and on behalf of my colleagues across the Midlands and the members of the Midlands Chamber, it's been a real privilege to have you with us today, and we found it massively informative. Thank you once again.
You're most welcome. And just to say, people that have unanswered questions, we will answer them. We're capturing them during this recording, and we will take the note of those and come back to you. If we have asked you to share your name, it's so that we can get back to you. So if you can share your name, if you haven't typed an answer yet, we'll keep this open for a few moments after we finish so that you can do that. We'd appreciate that so we can get back to you and answer your question. Thank you very much for your time this morning. Apologies for overrunning, and do speak to your chambers and let us help you through this next potential crisis of goods through borders. Thank you very much.
Liam, thank you. And as Liam